Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. The election games are afoot, starting with the UK elections, which were held yesterday. It seems Mr. Sunak's party is in for a very tough time. In currencies, not much to write home about except for the mild dollar weakness, which is pushing euro above the 1.08 mark. Good morning, JK. What's your take on the recent moves and how are you reading the current markets right now?
Good morning, Swaraj. Yes, first on the UK election, the Labour Party obviously is expected to win the most seats by any party since 2001. And the Conservative Party on the other side is going to win the fewest seats since the party was founded in 1834. That's for the record. Yes, elections are done and dusted almost except for formal announcement. But what the markets will be looking forward to would be the policies that the new government would be adopting, particularly how to address the high cost of living that the public is faced with, at the same time support the business, and also the challenge of maintaining the fiscal balance, which can easily get out of hand, as we have seen in the past. Interest will also be surrounding the next MPC meeting by Bank of England on August, where they most likely will be cutting rates, and that by and large discounted. But whether it will be followed by a series of rate cuts is what the market is looking at. So that's it. But I think now UK election over. It is the French election ahead on the second round on Sunday, and nothing is really clear. This is quite a contrast to UK election where nothing is clear. Whether it will be a hung party or whether there will be right wing, which will surprisingly come with a majority, and how weak Macron's party will be pushed into. So these are the uncertainties, and then what is the implication for Europe based on the election outcome is what the market would be interested in. So there's a lot of uncertainty there. Now, I think the immediate big focus is on the non-farm payroll data from US today. And their expectation is for 190,000, much below 272,000 of last month, 4% unemployment rate expected. And then the wages are also likely to be lower. But I would like to slightly explain the point of view that the non-farm payroll number itself has been not so reliable. It has been not only volatile, but also not really giving the clear picture. Because if you look at the most other indicators, they are all showing an employment sector slowing down. Both the ISM manufacturing and services showed drop in the employment index into contraction territory. And job openings went up in May, but while being considered historical, it should also be seen that the average job openings in the last 6 months was 8.47 million, much less than 9.06 million of the previous months and 9.68 million of last 12 months. Job quits last 1 year, 3,53,000, and the latest 1 year is 3,99,000. Previous year was 3,99,000 and latest is 350. That means less people are ready to quit jobs in the confidence of getting new jobs. Then that's about the quits. And then the job cuts have been higher in the last 6 months at 72,000 versus previous 6 months of 43,000. Jobless claims in the last 6 weeks, 2,34,000. Previous 6 weeks, 2,16,000. So we have all these indicators which are showing a definite slowdown in the employment sector, and to an extent this was also recognized by the Fed members in their minutes, but at the same time they continue to harp on rates having to remain higher for longer. Not only the job sector, but ISM, manufacturing and services both slipped into again contraction territory, and they have been steadily slowing down as well. We had inflation numbers, CPI, PPI, and core PCE all coming much closer to the 2.5 mark, just about the target that the Fed has set. So I think it's time for, if today's number also confirms unemployment rate at 4% or maybe higher even, I think it's time for Fed to indicate a rate cut in September, and maybe at least 2 cuts this year, because in Powell's own words, there is risk in both doing early as well as doing late, because the doing late would also mean economy can be pushed into a recession. So my point of view is that I think don't look too much at the non-farm payroll number, look at the unemployment number, and also in the background of all the previous numbers that have led to a slowdown in the economy, and particularly in the employment sector. So I'm looking at a weak US economy, evolving weakness in the economy, leading to a rate cut early by Fed in September. And whether it will mean a series of rate cuts or not depends on how the economy evolves in the coming months, and the inflation as well. Not much to talk about the rupee, because yesterday anyway it was a US holiday, not too much of movement, but we should be taking some cues from the employment report today, implications for Fed policy, and also the French elections, which can actually be kind of a risk-off event if it comes to the right wing getting majority there. Thank you.
Thank you, JK. And of course, the elections season seems to be in the limelight. With for UK, it seems the Labour Party is expected to win the most seats since 2021, and of course, the Conservatives are set to have the worst performance since the party was formed. Very interesting set of developments going on over there. Now, of course, attention would be on the French election. As JK mentioned, things are still uncertain in the French elections, with no clear indication as to who would be leading, or whether it would be a hung parliament. So things are still evolving over there. So that's something we'll keep on tracking. We'll have more updates for you on Monday. So do tune in on Monday. Have a very good weekend, and thank you for listening.